George of the jungle.
Well, looks like the economy might be on the rebound. A lot of people have been out of work for 6 weeks, 8 weeks, maybe even a little bit longer, and they're going to be taking a hit to their credit. And whether that's bankruptcy, coming out of a forbearance, a foreclosure, whatever the circumstances may be, at some point, you're going to need to reestablish your credit and get your credit scores back on track, because if you don't, your insurance costs are going to go up. You're going to need deposits for things that you normally never would have needed deposits for. And we're going to be discussing the best way to rebuild your credit and thecreditjungle.com today. This is George Anderson. Thank you for coming in. And over the course of my career, I've helped a lot of people, mostly coming out of a bankruptcy, whether it was a 7 or a 13 or whatnot, on how to start rebuilding credit. And there's some good ways and there's some not good ways to do it. One of the not good ways to do that is with some of these self-reporting account features that you can do with your rent, with your cell phone bill, with your utilities. If you are shelling out even $5 a month to be able to have a service like this, just stop it, save your money. It's not going to help you in the long run. They're not a high value trade line, and a lot of them don't report to all three bureaus. So save your money and pay attention to the alternatives I'm suggesting here. Secure credit cards are awesome because basically they'll issue one to anybody. But there's some different types of secured credit cards, and what we're going to be talking about here briefly is a secured credit card that after you've used it for a period of time, 6, 12, 18 months, it will convert to an unsecured credit card. And you'll say, well, my bank already does that. I mean, I had a secured credit card, I paid on time for a year, and then they issued me a new card and said, hey, congratulations, here's your unsecured card, and you can take your deposit back. Well, if you had your $500 there, when you take your deposit back, guess what that does? Yeah, it closes the account. So 15% of your credit score is length of time accounts have been established. So here you are trying to reestablish your credit, and you've got this $500 secured account, and as soon as you've played by the rules and done everything you're supposed to do, they say congratulations, and then you have one account that closes, 12-month history, wasn't the benefit that you needed, 24 months is really the length of time that you're looking for to get the best benefit out of the length of time reported for a credit card account. You got one that stops and another one that starts. So it's not helping you. But Citibank, Discover Card, Capital One, and there's a few others, and you can look these up and find out which one kind of fits your circumstances. But they all offer a secure credit card that converts to unsecured. In other words, you can take your money back, take your deposit back, and it will maintain the continuity of the same account number going forward while it becomes an unsecured card. Now that's huge. So if you've got the opportunity to do that, do that. The nice thing about a secured credit card, even if you're in a Chapter 13 bankruptcy, you do not need permission from the court because you are not applying for credit. Okay? You're depositing money and they're issuing a credit card that's collateralized against that. It'd be like borrowing from your 401k loan. It's not really a loan because you're borrowing from yourself. So that's one good way of doing it. Another one is the authorized user accounts. You don't need anything regardless of your situation. Anybody who has an authorized user account, if they want to add you onto that, make sure that it's a major bank credit card, preferably a 24-month payment history, preferably somebody who uses it frugally. And that includes you if you have your own secured credit card, using less than 10% of the available credit per month. Now somebody who, again, we've talked about this, but I thought on the internet it says less than 30%. Yeah, that's if you already have good credit. We're talking about somebody who is starting from zero or who is recovering from having had a credit event in their life. You have to be more careful. You're underneath the microscope. You have to watch your P's and your Q's. So that means no missed payments, whatever. And you're using the card, again, as a convenience to try to build credit. This is a tool that you want to use and a strategy. So again, if you can use just 2, 3, 4%, that's even better. But again, frequent use of the card and being able to use a major bank account that reports to all three bureaus. So those are a couple of tips that will help you. Hopefully that's some good advice. Thank you for coming into thecreditjungle.com today. This is George Anderson. Push button, get mortgage professional, and I hope to see you soon. Have a great day.